Jerusalem stands as Israel's eternal city and spiritual capital, a municipality of extraordinary significance where 3,000 years of history create real estate dynamics unlike any other market in the world. The city's property market in the third quarter of 2025 demonstrated exceptional resilience amid national correction trends, with average prices reaching 2,899,000 shekels, according to Central Bureau of Statistics data, representing remarkable 6.3% annual appreciation compared to the same period in 2024, when most Israeli cities experienced price declines. This counter-cyclical performance positions Jerusalem as the only major Israeli city showing strong positive growth during a period when Tel Aviv declined 1.6% and the Central District fell 2.8%. The quarterly price movement from the second to third quarter of 2025 showed continued positive momentum with 0.5% growth, making Jerusalem the only major city posting positive quarterly gains. This exceptional relative strength reflects multiple reinforcing factors, including structural supply constraints from geographic limitations and historic preservation requirements, irreplaceable spiritual significance attracting perpetual demand from religious communities worldwide, established diaspora investment patterns providing capital flows independent of Israeli economic conditions, and government institutional presence creating stable employment. Geographic and political constraints create Jerusalem's fundamental supply limitations. Hilly terrain, political boundaries, and extensive preservation requirements severely restrict developable land. The Old City and surrounding historic areas face strict building regulations, protecting ancient structures and archaeological resources, eliminating development opportunities in central locations where demand concentrates most intensely from buyers seeking proximity to Western Wall, Temple Mount, and other holy sites. The 3,000-year history as Jewish capital creates spiritual significance unmatched by any other city worldwide, generating perpetual demand from religious Jews seeking proximity to holy sites and the opportunity to fulfill religious obligations through Jerusalem residents. This spiritual premium manifests in buyer willingness to pay prices disconnected from conventional housing economics, with families sacrificing space, amenities, and financial comfort to afford Jerusalem addresses enabling walking access to Western Wall prayers and participation in Temple Mount pilgrimage traditions. Neighborhood segmentation in Jerusalem spans extraordinary diversity. Rechavia and Talbia represent Jerusalem's elite addresses commanding 40,000 to 70,000 shekels per square meter, with typical units ranging from 3.6 to 4.5 million shekels and above. German Colony commands 35,000 to 50,000 shekels per square meter, with typical properties at 3.2 to 4.0 million shekels. Baka serves young professionals and families at 35,000 to 50,000 shekels per square meter, with units typically ranging from 2.8 to 3.5 million shekels. Old Kadamon and Arnona offer established residential character at 28,000 to 38,000 shekels per square meter, with properties typically ranging from 2.5 to 3.5 million shekels. Beit Hakaram serves secular Western Jerusalem populations at 25,000 to 35,000 shekels per square meter. Gilo represents affordable southern Jerusalem with pricing at 18,000 to 25,000 shekels per square meter and properties typically ranging from 1.8 to 2.4 million shekels. Recent transaction examples from 2025 demonstrate the market's price positioning. A 4-room apartment on Gedalia Bublik Street sold for 2.7 million shekels, representing 82 square meters. A 3.5-room apartment on Abba Eben Street commanded 3.69 million shekels for 89 square meters in newer construction. A 4-room apartment on Biba Street commanded substantial 4.2 million shekels for 80 square meters, demonstrating premium pricing in desirable locations. The rental market demonstrates robust activity with gross yields averaging 3.54% across the city, outperforming Tel Aviv's 3.14% average. One-bedroom apartments typically rent for 3,200 to 5,000 shekels monthly, serving students and singles, particularly the substantial yeshiva student population. Two-bedroom units command 5,000 to 8,600 shekels monthly. Four-bedroom apartments generate 9,000 to 10,500 shekels monthly, while premium properties in Rechavia and Talbia command 11,900 to 14,000 shekels and above. Annual rental growth of at least 4% during 2024 to 2025 reflects sustained upward pressure from continued population growth. Structural supply constraints create Jerusalem's fundamental market characteristics. The transaction composition showing only 436 new unit sales versus over 700 second-hand transactions demonstrates limited new supply entering market despite sustained demand, with construction primarily occurring in peripheral areas rather than central locations. Religious community demographics create structural demand supporting Jerusalem market resilience independent of economic cycles. High birth rates among Orthodox and ultra-Orthodox communities generate organic household formation, requiring housing regardless of economic conditions. Religious lifestyle priorities emphasizing community proximity reduce outmigration that might otherwise moderate demand. The yeshiva student population creates continuous rental demand, supporting investor returns. International diaspora investment provides capital flows supporting Jerusalem market strength independent of Israeli economic conditions. Jewish communities worldwide view Jerusalem property as spiritual connection, inheritance for descendants, and concrete expression of religious identity. North American and European buyers frequently purchase apartments for part-year residence during holidays and visits. The new immigrant tax benefits provide substantial purchase tax reductions, reducing acquisition costs by hundreds of thousands of shekels on typical transactions. Government institutional presence creates stable employment foundation, supporting housing demand through civil service positions at Knesset, Supreme Court, and ministry offices. Hebrew University and other academic institutions create additional professional employment and student populations. The diplomatic community from embassies and international organizations generates premium rental demand. For diaspora buyers seeking spiritual connection and potential future residence, Jerusalem represents irreplaceable opportunity, combining religious significance with real estate investment. The 6.3% annual appreciation during challenging market conditions demonstrates counter-cyclical characteristics, providing portfolio diversification. The superior rental yields of 3.54% versus Tel Aviv's 3.14% create better cash flow dynamics. For local investors, Jerusalem provides compelling combination of yield and appreciation potential. Old Kadamon and Arnona offer value positioning with appreciation potential. Gilo represents affordable entry with rental demand from budget-conscious tenants and government employees. Properties near yeshivat and religious institutions benefit from sustained student rental demand. For religious families establishing permanent Jerusalem residence, neighborhood selection represents crucial decision affecting daily life quality through synagogue access, children's education options, and community integration opportunities. Proximity to holy sites commands spiritual premium justifying financial sacrifice for observant families, prioritizing religious practice. The comprehensive religious infrastructure including hundreds of synagogues, extensive yeshiva networks, and kosher commercial ecosystems creates self-contained religious environment. For sellers, Jerusalem's exceptional market strength creates favorable positioning. Emphasis on proximity to holy sites, neighborhood religious character, and community integration opportunities proves essential when marketing to appropriate buyer pools. Marketing through channels reaching North American and European Jewish communities can access international buyer pools with purchase motivations differing from local buyers. Market considerations requiring attention include dramatic variation in religious character across neighborhoods, with some areas predominantly ultra-Orthodox, others modern Orthodox, and still others secular. Commute distance of 60 to 75 minutes to Tel Aviv eliminates Jerusalem as viable option for daily Tel Aviv commuters. Government employment dominance creates different economic character than technology-focused Tel Aviv. Historic property maintenance in premium neighborhoods requires higher upkeep costs than modern construction. Security considerations, heightened following October 2023 events, increasingly influence buyer preferences, with properties featuring protected rooms commanding measurable premiums. Jerusalem's complex security environment creates distinct considerations, with municipal emergency preparedness infrastructure creating confidence among residents. Environmental and quality of life considerations reflect the city's highland location. The elevated positioning provides cooler temperatures than coastal cities during summer months. Historic character creates aesthetic environment distinguishing Jerusalem from modern development, though older building stock may lack contemporary energy efficiency. Future development prospects remain constrained by geographic limitations and preservation requirements. Urban renewal projects will continue in established neighborhoods. Government infrastructure investments, including light rail expansion, may enhance accessibility. Population growth from natural increase in religious communities and continued immigration should sustain housing demand. Demographic projections suggest Jerusalem will continue experiencing population growth driven primarily by high birth rates in religious communities and sustained immigration. The religious demographic dominance suggests continued demand concentration in neighborhoods with strong religious infrastructure. Comparison to alternative markets helps contextualize Jerusalem's value proposition. Tel Aviv commands comparable pricing with dramatically different character, emphasizing secular cosmopolitan lifestyle. Ramat Beit Shemesh offers religious community alternative at substantially lower costs. Modi'in provides modern planned city alternative for professional families, requiring employment access to both Jerusalem and Tel Aviv. Looking forward, Jerusalem's property market trajectory appears positioned for continued resilience based on fundamental demand drivers including spiritual significance, structural supply constraints, religious demographic dynamics, and sustained diaspora investment. The exceptional results showing 6.3% annual appreciation and positive quarterly growth demonstrate market momentum, suggesting near-term continuation of favorable dynamics. Jerusalem emerges as Israel's most resilient major market, demonstrating exceptional appreciation and positive quarterly growth when national markets experienced corrections. The city serves buyers whose motivations extend beyond conventional housing economics into spiritual, cultural, and emotional dimensions. For diaspora buyers seeking spiritual connection, religious families prioritizing holy site proximity, and investors pursuing counter-cyclical diversification, Jerusalem provides irreplaceable combination of attributes that no alternative market can match. The Eternal City rewards those who value what Jerusalem specifically offers: spiritual significance, historic character, and religious community.